What is the Earned Income Tax Credit, according to the IRS? The Earned Income Tax Credit, or Earned Income Credit, is a tax credit that is available to low-income and moderate-income wage earners and families in the United States of America who meet criteria established by the Internal Revenue Service. The U.S. federal government conceptualized the Earned Income Tax Credit as a work bonus plan intended to supplement the wages of low-income and moderate-income workers and thereby helps offset the effect of Social Security taxes. Considering its financial significance to many low-income wage earners, it is accordingly viewed as an anti-poverty tax benefit. Through the end of December 2022, as to the IRS's processing of 2021 income tax returns, there were approximately 31 million taxpayers that claimed the Earned Income Tax Credit, representing some $64 billion in earned income tax credits. This represents a national average of $2,043 received per claimant. The IRS in actuality contends that some 25% of eligible taxpayers actually fail to claim the Earned Income Tax Credit. Many taxpayers actually slide into the qualifying criteria when they lose their job, take a pay cut, reduce their hours of work, or take substantial time off, as these events can result in a drastic reduction in one's yearly wages and all too often unknowingly qualify the taxpayer for the Earned Income Tax Credit. The IRS further estimates that about one-third of the EITC eligible population turns over each year, making it important for potential claimants to review their eligibility each and every year. The qualifying criteria for the Earned Income Credit is predicated on the taxpayer's adjusted gross income relative to their marital status and the number of dependents that they are responsible for. Their marital status and number of children dependents also determines the amount of EITC that they are entitled to claim. A single taxpayer with no children or other dependents could thus be eligible for the Earned Income Credit. However, their income threshold would be the lowest amongst eligible taxpayers with the least amount of available credit, especially following the reduction that came about with the temporary boost that had been provided in the 2021 tax year under the American Rescue Plan, which provided a one-year tripling of the EITC for qualifying childless workers who only had to be 19 years of age or older, as opposed to the normal 25 years of age or older. The Earned Income Tax Credit is for workers whose adjusted gross income does not exceed the following limits in 2022. $53,057 for those with 3 or more qualifying children with valid Social Security numbers, boosted up to $59,187 for married filing jointly, $49,399 with 2 qualifying children who have valid Social Security numbers, but boosted up to $55,529 for those married filing jointly, $43,492 with 1 qualifying child who has a valid Social Security number, but boosted up to $49,622 for those married filing jointly, and $16,480 with no qualifying children who have valid Social Security numbers, boosted up to $22,610 for married filing jointly. Further requirements for obtaining the Earned Income Tax Credit applicable to all claimants. The taxpayer must have earned income. The taxpayer must have a valid Social Security number by the due date of their 2022 income tax return, including extensions. The taxpayer must meet certain requirements if they are separated from their spouse and not filing a joint return. The taxpayer must be a U.S. citizen or resident alien all year. The taxpayer cannot file IRS Form 2555 relating to foreign earned income. A further requirement for claiming the EITC is that taxpayers' investment income must be $10,300 or less, and the earned income tax credit age eligibility is 25 years of age or greater. Added requirements if the taxpayer has a qualifying child. Each qualifying child must meet the relationship, age, residency, and joint return tests. Each qualifying child cannot be used by more than one person to claim the earned income tax credit. And the taxpayer claimant cannot be a qualifying child of another person. Added requirements if the taxpayer has no qualifying children. The taxpayer must meet the age requirements. The taxpayer must be the dependent of another person. The taxpayer cannot be a qualifying child of another person. And the taxpayer must have lived in the United States more than half the year. For 2023, the Internal Revenue Service set out the following credit ranges associated with 2022 income tax returns. Up to $6,935 for 3 or more qualifying children. Up to $6,164 for 2 qualifying children. Up to $3,733 for 1 qualifying child. And up to $560 for no qualifying children. And as the IRS appropriately points out, even where a taxpayer is eligible for the earned income tax credit, they should not discount the possibility of being entitled to other tax credits, in particular other child-related tax credits. Thank you.